Welcome back. Today we're doing a deep dive into Uber Technologies, Inc. You probably know them for their ride-hailing app, but we're going beyond that.
Definitely.
We want to give you all the information you need to decide if UBR stock is something you should consider for your portfolio.
Exactly.
So we've got information from Uber's own announcements, financial analysis from Zacks, some historical and critical perspectives, and even insights from investment communities and business schools. We'll cover Uber's financials, what they've been up to lately, and their potential for the future.
Yeah, I think it's important to remember just how big Uber is. They're not just in the U.S.
Right.
They're operating in over 10,500 cities in 70 countries. It's not just connecting riders and drivers either. They've expanded to food delivery, package delivery, even freight transport. That global reach is definitely something to keep in mind when we talk about their growth potential.
Absolutely. And their journey has been pretty remarkable. Starting back in 2009, their initial focus was on making black car services more accessible and affordable. But it was the introduction of UberX in 2012 that really changed the game, allowing everyday car owners to become drivers.
Yeah, that move to open up to a much wider market was crucial. It brought in more customers, made pickups faster, and led to more competitive pricing.
And it really fueled their popularity.
Absolutely. And helped them snag a big chunk of the market share. But the question is, how's that translating to their financials today?
Well, that's a great question. Let's look at Uber's current performance. Zacks gives them a buy rating and expects them to do better than average in the coming months.
Okay.
They highlight Uber's strong growth, especially their cash flow growth, which is over 100% right now.
Wow.
In 2023, they reported $37.281 billion in revenue, and their net income was $1.887 billion.
Those are some pretty impressive numbers. But remember, it's important to look at the whole picture, not just the good stuff.
Exactly.
Zacks also gave them a low momentum score. This score is based on how much and how quickly their stock price has been changing recently. It suggests that maybe the market isn't feeling so great about the stock right now, even with those strong financials.
That's a good point. And to understand a company's potential, we can't just look at today's numbers. We need to consider what they're working on for the future. And Uber's always been known for putting a lot of money into research and development.
Right. And their acquisition of Otto in 2016 was a huge step towards self-driving cars.
Yeah.
That technology could completely change transportation.
It's a potential game changer. Think about what autonomous vehicles could mean for Uber's business model.
Yeah, lower labor costs, maybe more efficiency, and that could lead to higher profits.
Potentially. But we do have to remember that self-driving technology is still being developed, and there are lots of regulatory and logistical hurdles they'll need to overcome.
For sure.
And it's not just self-driving cars. Uber's looking at flying cars too. They want to be at the forefront, shaping the future of how we get around.
It's ambitious, but it shows they're thinking ahead. And their acquisitions also show this commitment to innovation, like when they bought Careem in 2020. That got them into the Middle East, a market that's growing really fast for ride-hailing services. Then there was the acquisition of Drizzly in 2021.
Which gave them a piece of the expanding alcohol delivery market.
A smart move, especially during the pandemic. And in 2022, they acquired Car Next Door.
A car-sharing platform.
So they're branching out, diversifying their offerings.
It's clear they're aiming for growth, trying to grab new markets and move into related industries.
But that kind of aggressive strategy can be risky.
It definitely adds complexity.
Speaking of complex, let's talk about Uber's valuation. Zacks gave them a C value score. This means, based on the usual financial ways of looking at things, the company might be fairly valued right now.
Okay.
But valuation can be subjective. There's no one right answer.
And we will compare this C-score with other valuation metrics a bit later in our discussion. So you can get a more well-rounded picture of Uber's market value and potential for growth.
Sounds good. But beyond financials and all the innovative stuff they're doing, we have to think about the impact Uber's having on the economy.
Absolutely. They've really revolutionized transportation.
And given millions of drivers around the world a way to make money on their own terms.
But this disruption has come with some challenges too.
Yeah, like traditional taxi services.
Right. They've been hit hard by Uber's competitive prices and wider availability. We've seen that when Uber enters a market, the value of taxi medallions can plummet.
That's a big deal for people who invested a lot in those permits. It raises questions about finding the right balance between innovation and protecting existing industries.
It's a complex issue. And then there's the impact on traffic. Uber offers a convenient and affordable option, but it's also been linked to increased congestion in some cities.
which is a valid concern. Cities are trying to figure out how to integrate ride-hailing services without making traffic and pollution worse.
It's a tricky situation for sure. And then, of course, there's the ongoing debate about how Uber classifies its drivers.
Yeah, as independent contractors, not employees.
And that has a huge impact on things like driver benefits, labor rights, and Uber's overall costs.
It's been the subject of so many legal challenges and labor disputes, creating a lot of uncertainty and potential financial risks for the company.
It really highlights this bigger conversation about the changing nature of work in the gig economy. And that's a conversation that's far from over.
True, and Uber's going to be right in the middle of it for years to come.
Definitely. Now let's switch gears a bit and talk about the potential pros and cons of actually owning UBE stock.
Okay, sounds good.
So on the plus side, Uber is the dominant player in a lot of regions, and they have a really strong brand.
Right.
And as we've discussed, they're constantly innovating, expanding into new markets and services. This suggests a lot of potential for growth, especially in emerging markets where ride-hailing is becoming more and more popular.
That makes sense. But we can't ignore the potential downsides either. Those regulatory hurdles and legal challenges they face are significant risks.
For sure.
The labor could all have a big impact on their profitability.
And their future prospects. So investors need to weigh those risks against the potential rewards.
Exactly. And competition is another factor.
Right. Even though Uber's in the lead right now, rivals like Lyft are out there.
Yeah.
And then there's the potential disruption from self-driving cars down the line.
All things to keep in mind.
Yeah.
And then there are the ethical considerations. Issues about passenger safety and data privacy have hurt Uber's reputation and led to legal problems.
Those issues raise questions about their commitment to social responsibility and the potential financial and reputational risks they face.
For sure.
And for those who might be wondering about dividends or share buybacks.
Well, Uber's website clearly states they don't currently pay dividends.
And while we don't have a lot of public information on share buybacks, their recent acquisitions suggest they're more focused on reinvesting their profits to grow the business.
Rather than buying back shares.
So it seems their priority right now is growth and dominating the market, which might mean shareholders won't see returns through dividends or buybacks for a while.
Yeah, that makes sense given their strategy. But that approach, that focus on growth, might actually appeal to certain investors,
Right.
especially those who are in it for the long haul and looking for their investment to increase in value over time rather than wanting immediate income from dividends.
Exactly. And for investors who really care about environmental, social, and governance factors, Uber's ESG profile is, well, it's complicated.
Yeah, definitely. They're promoting accessibility and economic opportunities, but there are those concerns about their labor practices, their environmental impact, and their safety record.
It's a bit of a mixed bag.
Yeah.
So let's take a closer look at these ESG factors, starting with the classification of drivers as independent contractors.
Right. There are concerns about fair labor practices and driver well-being.
And this has led to protests, lawsuits, and scrutiny from regulators in different places.
Yeah, it's been a big issue. And from an environmental standpoint, Uber's impact is, well, it's kind of multifaceted.
Right. On the one hand, ride-sharing could potentially lead to fewer people owning cars and encourage the use of more fuel-efficient vehicles.
But it's also been linked to more traffic congestion in some cities.
And then there is the environmental impact of their food delivery services, which often involve single-use packaging and lots of short trips.
Yeah, that's something environmentally conscious investors are definitely paying attention to.
And in terms of governance, Uber's been criticized for how they've handled safety incidents and data breaches in the past.
Right. They've put some safety measures and policies in place, but there are still concerns about passenger safety and protecting user data.
These ESG considerations are really important for investors who want their investments to align with their values.
Definitely. And for those who believe that sustainable business practices are crucial for long-term value.
So let's come back to our main question. Is UBR stock a good fit for your portfolio?
Well, ultimately, that's a decision you have to make for yourself.
Based on your own investment goals, your risk tolerance, and your ethical considerations. We've tried to give you a balanced view of Uber's strengths, weaknesses, the opportunities they have, and the threats they face.
We've looked at their financials, what they're working on for the future, how they're valued, the recent acquisitions, their impact on the economy, the good and bad of owning the stock, their dividend policy, what they're doing with share buybacks, a bit of their history, and those ESG factors.
It's a lot to consider. Hopefully this deep dive has given you a better understanding of both the potential upsides and the risks that come with investing in Uber.
And it's important to remember that investing always has some level of uncertainty. Just because a company has done well in the past, it doesn't guarantee they'll do well in the future.
That's a really important point. It's crucial to do your own research, think about your investment timeline, and carefully weigh all the things we've discussed before you make any decisions.
Absolutely. And if you're seriously thinking about adding UBU to your portfolio, it's always a good idea to talk to a financial advisor.
Right, someone who understands your specific situation and can give you personalized advice.
Uber is a company that's constantly changing, operating in an industry that's evolving quickly.
So staying up to date on their developments, changes in regulations, and what the competition is doing is really important.
Yeah, the more you know, the better decisions you can make about your investments.
And if you're interested in exploring other companies or industries, we'd love to hear from you.
Just leave us a comment on our YouTube video. We're always looking for new ideas for deep dives, and your feedback is valuable to us.
We appreciate you joining us for this deep dive into Uber. We hope you found it helpful and informative.
Remember, knowledge is power, especially when it comes to investing. The more informed you are, the better you'll be able to navigate the financial markets.
So I think it's safe to say Uber is a pretty fascinating case study for investors.
It really is. I mean, they're operating right at the intersection of technological innovation, economic disruption, and major societal changes.
And how they handle those things will have a big impact.
Huge impact on the future of transportation, labor markets, the whole gig economy. Their decisions, how they adapt to this constantly changing landscape, it's going to have ripple effects that go way beyond their own profits.
Absolutely. And I think we've shown in this deep dive that there's a lot to consider with Uber. You've got the impressive growth, the innovative spirit,
Right.
but then you have the regulatory and ethical challenges, which are serious.
They are. And as with any investment, it's ultimately up to you. You have to weigh those potential rewards against the risks. Think about your own investment goals, what you believe in.
Right, your values.
And remember, do your research. We encourage you to keep learning about Uber and stay informed about what could affect their future.
That's key.
Yeah.
Well, that brings us to the end of our deep dive into Uber.
We hope it's been helpful and given you some things to think about.
Definitely. And if you have any thoughts or questions, we'd love to hear them.
Leave a comment on our YouTube video.
And if you're interested in other deep dives into companies or industries that are shaping our world,
Make sure to subscribe to our channel.
we'll see you next time.